Crypto news, the latest in the crypto world, every day.
The Paris-based cryptocurrency firm, Blockchain Group, has acquired $68 million worth of Bitcoin, further solidifying European institutions' growing interest in the cryptocurrency. This acquisition comprises 624 Bitcoin, valued at €60.2 million. As a result, the firm's total holdings now stand at 1,471 Bitcoin, valued at over $154 million. The significant increase in institutional interest can be attributed to the U.S. approval of spot Bitcoin exchange-traded funds in January 2024. Additionally, U.S. President Donald Trump's executive order outlining a plan to create a Bitcoin reserve using seized crypto assets has contributed to the growing appetite for Bitcoin. Several European companies, including French banking giant BNP Paribas and Austrian fintech firm Bitpanda, have also displayed Bitcoin treasury ambitions. Meanwhile, Bitcoin market analysis suggests that the cryptocurrency is expected to consolidate between $103,000 and $108,000. Notable Bitcoin treasury firms, such as MicroStrategy, continue to spearhead global Bitcoin adoption efforts. MicroStrategy, the world's largest corporate Bitcoin holder, has over $60.5 billion worth of Bitcoin. The firm recently announced plans to raise $250 million to fund future Bitcoin acquisitions. The Dubai Financial Services Authority has approved Ripple's Rlust stablecoin, enabling companies in the Dubai International Financial Center to utilize it for various virtual asset services, including payments, treasury management, and more. The DIFC, a major financial district serving the Middle East, Africa, and South Asia, is home to nearly 7,000 registered businesses. Ripple's managing director for the Middle East and Africa, Rees Merrick, noted that the UAE's digital economy is vibrant, with growing interest from businesses of all sizes in crypto solutions, particularly cross-border payments and digital asset custody. The company is collaborating with local partners, such as digital bank Zand and fintech platform Mamo, which are expected to adopt Ripple's regulated payment services. The Rlust stablecoin will also support the Dubai Land Department's real estate tokenization initiative, which aims to record title deeds on the XRP ledger. This approval follows Ripple's recent licensing by the Dubai Financial Services Authority, allowing it to operate in the DIFC. The Rlust stablecoin is one of the few globally approved under the authority's crypto token regime and the New York Department of Financial Services Trust Company Charter, with a similar approval granted by the New York Department of Financial Services on December 10. BCP Technologies, a UK-registered cryptocurrency firm, has launched a new stablecoin called Tokenized GBP, or TGBP, backed by the British pound. The launch comes after a 14-month review in the Financial Conduct Authority's regulatory sandbox. TGBP is now live on BCP Markets, the company's crypto trading platform, and is available to customers who have passed Know Your Customer checks. Major exchanges are expected to list TGBP in the coming weeks. The stablecoin is fully backed by cash held in a segregated bank account, with each token representing £1. Initially issued on the Ethereum blockchain as an ERC20 token, TGBP may in the future be backed by short-term UK government bonds. BCP Technologies CEO, Benoit Marzouk, stated that TGBP serves as a live proof of concept for future FCA stablecoin regulation. The company will participate in an FCA roundtable discussion on July 4 to discuss the recently published consultation paper on proposed rules for stablecoin issuers. The market for pound-backed stablecoins is relatively small, with only 2 tracked stablecoins currently available, having a combined market capitalization of less than $500,000. BCP Technologies aims to expand the use of TGBP for various purposes, including cross-border payments, institutional collateral management, and decentralized finance lending. Coinbase, a leading cryptocurrency exchange, suffered a data breach involving nearly 70,000 customers. The incident occurred when 2 employees of TaskUs, an outsourcing firm handling Coinbase customer support, allegedly leaked customer information to hackers in exchange for money. According to reports, an India-based TaskUs employee was caught taking pictures of her work computer with her personal phone, sparking an investigation. Coinbase was immediately notified of the breach in January, but did not publicly disclose the incident until a regulatory filing on May 14. The breach led to a ransom demand of $20 million from hackers, which Coinbase rejected. The company subsequently cut ties with the involved TaskUs personnel and tightened controls. This incident is not the first time TaskUs has been linked to a data breach, as the firm was accused of a crypto-related breach in 2022 involving Ledger's servers. The breach has resulted in a wave of lawsuits against Coinbase, with the company facing criticism for its handling of customer data. Coinbase has maintained that it takes data protection seriously and has taken steps to prevent similar incidents in the future. The Australian Transaction Reports and Analysis Centre, AUSTRAC, has introduced new operating rules for cryptocurrency ATM operators in an effort to combat rising scams. The regulations include a limit of $5,000 approximately $3,250, on cash deposits and withdrawals. Crypto ATM providers are also required to implement scam warning signs, enhanced transaction monitoring, and stricter customer due diligence. The move comes after an investigation by an AUSTRAC task force found that users over 50 years old account for almost 72% of all transactions by value. This demographic is particularly vulnerable to scams, with many victims reportedly feeling embarrassed and unsure of how to report the crime. In Australia, nearly 150,000 crypto ATM transactions occur annually, with approximately $275 million moving through these machines. The Australian Federal Police reported 150 unique scam cases involving crypto ATMs, resulting in losses exceeding $3.1 million Australian dollars, or roughly $2 million. AUSTRAC plans to review the effectiveness of these new conditions and adjust them as needed. The agency aims to protect individuals from scams and prevent criminal exploitation.